Wow, traders and friends, market enthusiasts right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this Monday afternoon market recap. Today, obviously, the markets have taken another turn for the worse. The Dow Jones Industrial Average closed down 312 points. Very nice engulfing type of candlestick on the daily. The S&P closed down just under 50 points, 49.57. A very gnarly bearish continuation candlestick setting up on Monday's trading session. And of course, the Nasdaq, we're seeing the continuation down from that engulfing candlestick pattern, 2-day continuation pattern, or at least a reversal. Candlestick pattern at resistance, down 142 points on the daily candle. This hasn't been somewhat of a surprise. It hasn't been really a surprise whatsoever. We have had a plethora, and very humbly speaking, a plethora of very bearish trade setups really stemming from last weekend, which have continued in our directional favor. We have produced some absolutely phenomenal returns. And as a coach and a mentor, I'm very proud, but also very humble to walk through with you, people on this YouTube channel, outside of that pro analysis resource, the trades which we have been following, and just to show you how they are materializing as at the close on this Monday afternoon. If you have any questions whatsoever on these individual trade setups, please email me, success@pivotpoint-trading.com. I can answer any questions which you have in terms of market formation and, of course, how these individual trades are moving in our favor. There is quite a lot, I should say, on this Monday afternoon market recap to walk through. I will say also that I've been struggling to overcome this chest infection, which I've had for the better part of 4 weeks, pushing 5 weeks right now. I thought it had left me. However, it has returned. And as such, I often break down into a little bit of a cough. So I will say from the outset of this Monday afternoon recording, as it has been since late, or I should say, mid-August, early September, I'm still struggling to overcome this chest infection. So if I break down, my apologies for the inconsistency in my language, or as my presentation at least progresses over the next 10 minutes or so. Enough about that. Let's move into some of the individual trade setups, which we have been fortunate enough to take advantage of over the past weeks, a week or so worth of trading. Boeing Airlines has been an absolutely phenomenal trade. 133.24 was our original bearish entry. As it stands on this Monday afternoon, it's closed down here at 128.13. That is roughly a $5 return on this swing trade as it stands on Monday. We do have our first target down here at 126.02. If all goes according to plan, we should hit this in the next day or two. So 1 to 2 days, we should be out of this trade at our first target at 126.02 for a very nice $7 profit on this Boeing Airlines trade. If you are in this trade, as I imagine the majority of people are still, I'd move my stop down to about 132 or even as low as 130. I'd be locking in profit below our 133.24 entry, and I'd just be letting this trade run its course over the next week or so to see how low this trade moves in agreement with the overall market. So Boeing Airlines was the first trade which I wanted to reference as at the close on Monday. The second trade, again from our top 12 individual trade list, has been Walgreens Boots and Alliance. As at the close on Monday, we have hit our first target here. $82.72 was our target. Our original entries, we had two of them, 88.88 and a secondary entry at 87.72. Depending on where you got into this, it was another $5 to $6 return. And these are very quick short-term swing trades. This particular trade right here, we held for 7 trading sessions. Actually, it was 6 full trading sessions out on the 7th. So in terms of a percentage return, I haven't done the maths, but to put it in perspective of the Boeing Airlines trade, this has been a 50, very close to a 60% return on our investment on these two particular individual swing trades. A very great way, at least, to be in one trade still on the Boeing Airlines, but also out and banking profit, putting money in our back pocket with this Walgreens Boots and Alliance trade. Outside of these two particular trades, we also have the Google swing trade, which again has just absolutely capitulated during Fridays and also today's trading session. Today we closed down very close to $16, our original entry. $658.20. Today, we hit our first target at $626.50. This trade right here, in terms of intrinsic value into those put option contracts, has made $32. Phenomenal return on this Google trade. We had a $1 risk profile as at the close on Friday. So, I mean, in terms of the trade setup, it was an absolutely majestic trade. And there's a very good chance that, again, even tomorrow, we may come down as low as $611 If that happens, it will be over a $50 return on this Google trade. So I mean, 3 very stellar trade setups, executions, and outcomes on those 3 trades stemming from Pro. Outside of those 3 trades today, Caterpillar broke below our $64.20 entry. In terms of where we expect this trade to move to, we've got targets. I mean, it's really scary. I have to zoom out as far as I have, put it into a line chart. Our next support area on Caterpillar comes in about $55.20. Write that down, $55.20. Here we are trading at $63.79. So as at the close on Monday, this is another profitable trade. Here comes my cough, by the way. It is a profitable trade. It's only up about 70 cents at the moment, but in terms of risk and reward, you can very much put your risk or place your stop just above Friday's candle right here, and you have a very, very nice $10 or so, $9 or so move down to our next area or our first target on this Caterpillar trade. What we have right now is a continuation gap stemming from that forward guidance which came out last week, down riding, or at least writing off at least 1% of at least revenue moving into this calendar year, 5% moving into 2016. It's the 33rd consecutive month of declining sales, and as such, Caterpillar laying off just over 10,000 workers worldwide, unfortunately. So things are not looking good for Caterpillar. It's again a sign of the global weakness which we are seeing in the global economy. Caterpillar is at the forefront of this move. As such, it looks like an incredible trade down to 56.05. Earnings is set to be released on the 22nd of October, so I'm not sure if this is really going to throw a spanner in the works of this trade continuing in our direction. By all means, at the moment, it really looks as though this trade is going to continue, and it's going to be another great result for us in that Pro class. Outside of the Caterpillar trade today, personally, I sat out of Tesla, but we had a 251.70 entry off from this red rejection zone right here. We're trading at 248.43, so this may be the beginning of the next swing down to 221 or 201. Personally, I was very much happy with the Boeing Airlines and the Walgreens Boots and Alliance trade, and also the Caterpillar trade, and also the Apple trade, which hasn't triggered yet. That's why I left Tesla off the table personally, but it looks as though it's another really great trade setup. I still very much so like the trade setup. I agree with it, but personally, I was already in enough positions and I had already had enough return to be very happy without pushing the limits or the boundaries of becoming greedy. You never want to become greedy in terms of trade setups and executions in the market itself. It would become somewhat arrogant or cocky. It's always great to be humble, and as such, I am very much humble walking through recaps of these individual trades. Outside of that, Tesla looks great, by the way. Place your stop above today's candle, about 261, and let the trade run out. Goldman Sachs today hit our target at 174.62. Again, in full disclaimer, I did not take the trade. I made it very clear 2 weeks ago in Pro that I wouldn't be doing it just based on risk and reward. But that 178.88 entry down to 174.62 did work out for people who did take the trade. Congratulations on that. If there's one thing to take away from Goldman Sachs is that the trade setup really in terms of risk and reward didn't merit your trading capital. It wasn't really worthy of your money. It did play out. You did get rewarded. It was a really nice trade. But as such, there are better trades out there, much like this Apple trade as well. I'm not going to go into the nitty gritty of it all, but that is my favorite trade outside of the trades which have essentially triggered as at the close on Monday, outside of our Baidu trade again, which is looking very, very nice. It has been holding up in some form of sort of like a continuation type of pattern. Generally, it looks as though we are setting up some form of a stair-step continuation, which will break in the direction of the trend. The trend for Baidu is bearish. So we're looking for a move below 130.30 down to 115.30. Don't look at these YouTube updates for one moment and think that you know it all in terms of trade analysis and start setting trades up off these YouTube videos. You really need to understand why it is that we're trading in the direction which we are. And I explained that in that pro analysis class over the weekend. So if you're in here trying to find these little triggers and trying to put them into your own account with actually understanding why it is that we do what we do, it's very, very risky and also and borderline negligent in many ways on yourself to be trying to get away with things like that. All I'm doing right now is just recapping individual trade setups from that analysis class, which is posted up on our website. So I just want you to take advantage of that if in fact you are interested in learning how to trade the markets, and if you are looking for legitimate returns on individual trade setups, technically speaking as well. Outside of that, it is a very good chance at least that the markets are going to push on down to about 15,638. That will be some form, again, of a short-term or at least an intermediate double bottom, which will and should set off maybe a 2 to 3 month rally back up into that 200 simple moving average. This is more so a longer term outlook. Again, for the US indices, but you have to pay very close attention to the fact that we are getting a lot of death crosses. The 100 is crossing the 200, and this is going to act as long-term resistance now that we have entered into a correctional type of movement across all three of the US indices. Again, on the S&P 500, we do have that death cross, 100 below the 200. The only exception to this at the moment is the NASDAQ. The NASDAQ doesn't have it, but if we do push on down to about 4,380, back down to those mid to late August capitulation lows, we will see the 100 turn very abruptly and sharply down below the 200. So we will have technically all three markets in agreement, which will be very ominous, very bearish for the overall three markets. I have broken down the three US indices in more of a macro or longer term outlook in those pro analysis classes, very much more so than what I'm doing here for you in this very quick Monday afternoon market recap. Outside of this, however, I will very much quickly bring up the transportation averages, because today you can see this continuational type of trigger, or at least this continuational type of candle. We've got what we call a Moroboshi long day candle. We've got the shaved top and also the shaved bottom. Exceptionally bearish. This is a continuational type of sign. It wouldn't surprise me for the transports to move back down to about 7,480. Again, just much like the industrials, we will base out here. And then over the next 1 or 2 months, we will see the market move back up into that 200 simple moving average. It's anyone's guess in terms of time when we will or when we will move back up into these resistance areas, and where the 200 declining simple moving average will actually dissect or intersect price in the future. So, I mean, we can have some price projections at the moment. I do have this red box. 8,500 is a longer term bullish trigger when the markets do turn around. But at the moment, the trend, at least on momentum as well, is to the downside. It works very, very nicely with our individual trade setups. We have a beautiful, or I should say a various amount of beautiful returns in terms of individual trade setups. And we also have Apple. I mean, Apple is set to roll. And if you look at the NASDAQ and you say to yourself, well, we've got quite some distance to sell off to until we hit a legitimate area of support. And you have a look at the Apple trade and you just say to yourself, well, we've got about a $6 or $7 profit on this once it triggers below 111.46. You can sort of see how the markets are really starting to establish itself, and how the structure of the market is really directing price for a lot of these big companies which we follow in that top 12 individual trade list in that pro analysis class. So I wanted to round out this Monday recap as it stands before I start coughing again, unfortunately. I hope you have a fantastic Monday evening. I'm receiving a lot of mail right now from people asking about trade management. Where do I place my stops? What do I do with the trade? The trade's working out. Should I bank profit? Should I hold on to the trade? I think I've answered most of those questions. Just be patient with the momentum. The momentum is continuing. It is coming. And we probably will see again the markets pushing on down to these at least relative lows, where we will exit out of a lot of these trades for probably even more profit, and maybe even turn cautiously bullish. I mean, more on that this week coming up, but it really has been a great way to start this week's worth of trading. Have a great Monday evening, traders and friends right around the world. If you have any questions whatsoever, please email me, success@pivotpoint-trading.com. This is James signing out on behalf of Pivot Point Trading. All the best, everyone. Goodbye.